Are you prepared for some fascinating facts about Tesla? Prepare to be astounded as we delve into Tasha Keeney's most recent professional analysis. Tasha has first-hand knowledge of recent developments from Elon Musk and the company, including the expansion of Tesla's insurance business and the possibility of a new 25,000 Tesla, which may quadruple your investment in the company. With Tesla insurance plans expected to expand to over 45 states by the end of 2023, Tasha has you covered. Now is a fantastic moment to invest in the business, and who knows? Elon might have some surprises in store for us. Click the like button to find out. Remain calm and prepared to be astounded by Tasha's knowledgeable observations and analysis. Recall that Tasha prefers to use the dollar cost average when investing in Tesla, so follow her lead and together, we can explore what the future holds. Tasha once again made the following remarks in public recently. In my opinion, electric vehicles are here to stay in the long run. If I were Ford or any other traditional automaker, I would be really concerned because the majority of their installed base and the vehicles they sell are gas-powered automobiles. Let's talk about two major developments that could cause Tesla stock to double in the next few minutes. First, I want to talk about some recently disclosed Tesla updates that could affect the company the following week. According to Tesla's most recent earnings conference, demand is higher than ever and supply is outpacing supply by a factor of 2. Texas, in particular, would not start producing Cybertrucks in large quantities until 2024. This new vehicle may be the new 25,000 Tesla that we've all been waiting for. But I wanted to know in the comments if you think we'll see cheaper Tesla on March 1st, or if you think Elon has something else in store for us. I mentioned Tesla insurance because people often miss it and overlook it, but listen up. Tesla Insurance is currently in top states with plans to sell insurance in 45 states by the end of 2023. There is a huge potential for Tesla to deliver up to 2 million vehicles in 2023, which brings me to my first catalyst for 2023. Before I go over the latest developments that you may have missed, it's important to keep in mind that one of my favorite investment strategies is the simple dollar cost average into Tesla. If the stock drops 5 or 10%, I'll continue to buy more shares. For those who are not familiar with Warren Buffett, he built his empire on the back of the insurance business decades ago, in the automotive insurance market in the United States, which is about $300 billion today. The reason for this is that, in my opinion, Tesla still has a lot of room for growth and innovation. Despite what you may have heard or read in the media, we have some shocking news. Elon is alive. Many people had expressed concern that Tesla's reputation would suffer as a result of his appointment as CEO of Twitter, but after hearing him speak, skeptics should feel more reassured than ever. The most frequent question we get from investors is regarding demand, and Elon responded, "I want to put that concern to rest by saying that so far in January, we've seen the strongest orders year to date than ever before. It's always been our goal at Tesla to make cars that are affordable to as many people as possible, so I'm glad that we're able to do so. I think there's just a big, in my opinion, Tesla will keep breaking sales records," Tasha added. "If you don't believe me, just listen to this. All things considered, we're also making very good progress on cost control, and we can measure it with the growth in production. So despite everything, Tesla will continue to break records time and time again. And hear me out. I know that speculating that Tesla could double in the next 12 months sounds completely crazy. But whether it happens or not, I still intend to buy Tesla stock whenever I can, little by little. Not to mention that Cathie Wood has a ridiculous price target for the next 5 to 10 years, and she has been buying the dip repeatedly. All of this suggests to me that Tesla needs to increase its profit. In conclusion, I believe the company is headed in the correct direction for both of these goals. And I also believe that many conventional automakers are rushing to catch up with Tesla since they first had concerns about its capacity to meet consumer demand. Tasha talked about Tesla and its latest developments. According to them, electric cars are the way of the future, and traditional audio manufacturers are having problems as they mostly offer gas-powered cars. Tasha cites two noteworthy developments: the expansion of Tesla's insurance division and the release of a new, reasonably priced Tesla 25 that have the potential to treble the stock price of Tesla. She believes that dollar cost averaging will help Tesla stock rise. Currently available in the top states, Tesla Insurance wants to extend to 45 states by the end of 2023. This may give Tesla a significant share of the $300 billion U.S. vehicle insurance market, since they think there is potential for development and innovation. Before we go, Let me share a very special bonus about Tesla insurance that is not often appreciated by average investors. She also mentions that despite some concerns about demand, Elon Musk has reported strong order numbers so far in January. Tasha believes that Tesla will continue to break sales records, and that the companies are on the right track to increase profits and decrease production costs. Tesla has adopted a revolutionary approach to auto insurance, and this creative strategy can benefit the business greatly. For instance, Elon Musk, the CEO of Tesla, is working to lower insurance rates and repair costs by improving the software and design of Tesla vehicles. On the other hand, insurance companies are writing off low-mileage Tesla models that are involved in accidents and selling them at salvage auctions because of their exorbitant repair expenses. On Wednesday's Q4 earnings call for Tesla, Elon Musk claimed that third-party insurers' insurance premiums were unnecessarily high, and that Tesla's insurance division was resolving the problem by charging Tesla owners less. Musk also emphasized the company's plan to use better software and design to lower the cost of fixing at Tesla in the event of an accident. It's amazing how little adjustments to the bumper's design and the availability of replacement parts required for collision repair can have a significant impact on the cost of repairs. According to Musk, the majority of incidents are relatively minor, such as a scuffed side of the vehicle or a broken fender. Rotor analysis hasn't taken into account any recent evidence regarding what happens to low-mileage Teslas involved in collisions. Less than 10,000 miles were on most of the more than 120 models that were certified total losses following collisions and put up for auction in December and January. The two biggest salvage auction companies in the United States, Copart and IAA, provide data indicating that the retail prices of these cars range from $60,000 to over $80,000. Insurance companies typically declare a vehicle a total loss and compensate the owner when the cost of repairs is deemed too high. In certain cases, the insurance companies that bought back the crash vehicles and listed them for auction are listed in the Copart listings. The auction listings indicated the type of collision the vehicle was involved in and typically have post-crash photos but don't provide specific details on the extent of damage. The State Farm Farmers and Geico Progressive Geico is a division of Berkshire Hathaway, owned by Warren Buffett. Tesla's CFO, Zachary Kirkhorn, revealed during the company's earnings call on Wednesday that the insurance division had generated premiums at an annual rate of $300 million, growing at a rate of 20 quarters over a quarter. This growth rate exceeded that of Tesla's vehicle business. All of the models examined in the study were either 2022 or 2023 models, which were produced at the Fremont plant in California, or the Austin plant in Texas out of the 15 Model Ys long-range all but one of the vehicles manufactured in Austin between June and November that were cleared for total loss following the collision had less than 10,000 miles on the odometer. A facade, the selling price of the Austin-built Collision 2022 Model Y long range, which was listed by IAA in early January, was $61,388, with an anticipated repair cost of $50,388. The car's owner was not identified. The retail price of another Austin-built Model Y, which was involved in a side collision and was recruited by IAA, was $72,667, with an estimated repair cost of $43,814. This concludes our conversation for this video. If you haven't subscribed to Wall Street Games yet, please do so right away. Then, hit the like button. I'll see you in the next video.